The overhang of tariffs and floods in North India cast a shadow, but the market comes significantly off its opening lows. IT and realty are the big drags, while consumer durables and metals eke out some gains.
Indigo Airlines co-founder Rakesh Gangwal and family likely offloaded a smaller than intended 3.1% stake. While the reason for trimming the deal size is unclear, Gangwal's spectacular exit trend stands out.
Veteran investor Ramdev Agarwal tells CNBC-TV18 the uncertainty over a trade deal presents an opportunity to invest as a deal will eventually happen. But JP Morgan's Jahangir Aziz frets us and a US tariff will hurt FDI.
The Finance Ministry's economic review says that while immediate impact of US tariffs appear limited, the secondary and tertiary effects pose a challenge. Given this, it sees trade negotiations as crucial.
Hello, good afternoon and welcome to Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vidhi Motiwala, with me is Mangalam Malu as well as Ekta Batra. Good afternoon, guys. After a gap down, a recovery and managing to hold on to 24,600 as of now. So that is going to be interesting to watch out for, whether this continues in the second half of the trading session. Will we see a further recovery? Is it something that at least I'm keeping my eye on and hoping for a better day coming in green?
You know, it'll be very interesting to watch out for. Why do I say that? Because on Monday, when the market saw a bit of a recovery, there were a lot of put writers active in trade. And then on Tuesday, we saw that 250-point decline that happened. So all those put writers were taken out. But on the same day, ahead of expiry, a lot of call writers came into the market as well. So do those call writers get taken out today or not will be something that we'll be watching out for. After the 95-point downtick today, plus a 50-point deficit that we had on Tuesday versus the start of the series, we're down about 150 points for the series. The bulls would say we'd be happy if we close flat for the series and not with a bigger gash, given the sort of, triggers that we have going forward.
Yes, absolutely. And I think, the broader markets are the pain point as well. So that's what we really need to watch out for. The mid-cap index, which is down around 0.5% as we speak at this point in time. We have the BSE small-cap index, which is down around 0.3%, and the Bank Nifty, which is down around 0.6% as well. But if you're just talking about the broader markets, if you look at it on a year-to-date basis, there is this underperformance which is now seeping through as compared to the Nifty and the Sensex. On a year-to-date basis, the Nifty and the Sensex are up around 4% and 3% respectively. And if you look at the mid-caps have declined around 1% already year to date. And the small cap index, the BSE small cap index, is down around 5.8% this year. So that's probably one of the key areas to possibly monitor as the news carries on and as one assesses the impact, the larger impact of what the 50% tariffs could be and how long they in fact sustain. In fact, let's start the show with the big story. As India faces 50% US tariffs that come into effect from yesterday, we did speak with veteran investor Ramdev Agarwal and JP Morgan's Jahangir Aziz. Listen in to what both of them had to say on this important topic.
If it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade-related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms, and so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at isolated things, let's look at it, what will be the impact on the earnings? Because the earnings are what is going to drive the markets. If we have, say, 25% deal in next 10-15 days or month or whatever, I think market has already calibrated that particular kind of thing, and the whole world is paying. It's not that we are only paying 25%, nobody else is paying.
I think it is much better to look at the sectoral impact. And I think the sectoral impact is where it matters, and it matters a lot because the impact over there can be significant. 2.4%, roughly 20% of India's exports goes to the US. there are certain things that are exempt from the 50%, which is electronics, which is fuels and pharmaceuticals. That brings it down to about 1.7, 1.8% of GDP. If you take the value added of it, i.e., if you take the import content of that, then the impact is about 1.1% of GDP. If you are going to get a impact coming from the 50% tariffs, and this is going to get concentrated on sectors like seafood, sectors like textiles, sectors like non-electronic manufacturing, gems and jewelry, then the impact on employment is going to be significant.
Let's keep it with this tariff topic that's come in, right? 50% tariff that has been imposed on Indian products. Now, government sources are saying that Indian economy will be able to actually absorb the impact, and that will be through export diversification measures, trade deals, FTAs with UK, and a possible trade deal with European Union. Parikshit caught up with Sudarshan Venu, chairman and MD at TVS Motors, to discuss the US tariff impact on India's manufacturing industry and specifically the auto sector. Listen in.
I think TVS Motors focuses on 2 and 3 wheelers. So as far as this industry is concerned, 3 of the top 5 players by volume are Indian companies. In Africa, some parts of Latin America, you see a lot of vehicles from Bajaj, from us, and from others as well. So I think we are a globally competitive industry where customers across the world and in many countries see value for our products, particularly in emerging markets. There's good market share of Indian two-wheelers. So I think there are many opportunities both in the fastest growing large economy here in India and also in many of these countries where we have a good presence and where there is a lot of growth in the industry.
Right. Overall, as the Finance Ministry in its economic review has also said that there is a secondary and tertiary impact of tariffs that will be seen. The uncertainty impacts business confidence. Do you see certain impact on TVS Motor Company and its growth plans?
I think TVS Motor Company's growth plans are intact. Our presence is in India, of course, and in many emerging markets where there is structural growth. There is growth in demand among the middle class for two-wheelers. There are attractive launches, including one today and some recently in the past and also in the future from TVS. And I think all this means that TVS is well positioned to continue on its journey, and we're very excited about this.
Right. How do you think India can emerge stronger? Because it is being said by a number of people that now is the time for reforms. What would be your recommendation and how India can use this opportunity?
I think the government has taken a lot of steps to improve market access to EU, to UK, to Switzerland, to Australia, to UAE, and to many other countries. There is also robust exports in some sectors like ours towards Latin America, Africa, and the Middle East. So all these, I think, along with, of course, the robust growth in demand in India itself, are opportunities to capitalize on.
All right, as deliberations, discussions and negotiations continue, we will keep an eye out on any conclusions that emanate from that as well. The TVS Motor Group telling CNBC-TV18 that 2 of the top 5 players by volume in the two-wheelers and three-wheeler segments are Indian companies. We are seeing, some outperformance of the two-wheeler names over the last few trading sessions. In fact, what we'll do is take a short break, come back. On the other side, we discuss the real estate space, the demand trends in the real estate sector, which tells you that over last year, NCR prices have actually increased by 19%. Gulam Zia, the head at Knight Frank, joins in with the latest findings from his report. Nifty holding with cuts of almost 85 odd points. We have a couple of these consumption names. Asian Paints, for one, has moved higher. Remember, ahead of last year, festive season would aid all these paint companies, home improvement companies. But it will be very interesting to see how consumer durables play out as well. Why do I say that? Because there was an unseasonal rain that marred the first quarter for them, and now there is some havoc that has been wreaked by heavy rains in the northern part of the country as well. So the second quarter does not look particularly good too. But despite that, Blue Star is doing extremely well. Voltas has moved to the high point of trade, and Whirlpool continues to do well. That one too has moved to the high point of trade as well. But Lodha Developers, that's the one which has moved lower. And I'm particularly watching out for a couple of names which include the likes of AB Fashion and Retail, which have taken a sharp knockdown at the low point of trade for AB Fashion and Retail. Because remember, today is the last trading day for AB Fashion and Retail in the F&O space. So a lot of the open interest which is pent up will have to be unwound as we move towards close. So watch out for that counter. All right. But speaking about Lodha Developers and the real estate space itself, let's focus on the real estate space, Ekta.
Yes, absolutely. We had an interesting Morgan Stanley report which came in on the real estate space where they have indicated that the July launches were weak. In fact, they've showed a first dip in the past 4 years in terms of last 12 months. Q1Q is down around 2%. But they are saying that it could possibly catch up in the month of August or September. To talk about this, we do have Ghulam Zia, who is joining in. He's the Senior Executive Director, Knight Frank India. Ghulam, hi, welcome to the show. Well, we're not discussing your report today, but there is a report on real estate which has come out, which is indicative of the fact that the July launches have been a bit sluggish and have shown a dip for the first time in 4 years. Is that the case? What's the on-ground situation currently?
I think the launch number that you're talking about, I would not contest it because even our findings are more or less in sync with what you're talking about. But I would not be unduly worried about it because, another few days and we will be entering the Shraddh Paksh. This is that period where, in any case, transactions actually take a backseat because most of the customers don't want to sign the dotted line during that phase. So this is definitely in preparation of that phase where you don't need to have a huge inventory hanging around in the market with not much of an interest from buyer community. So what you're talking about is right. We are also expecting when post Shraddh Paksh, when the festive season launches it, and that is the time Diwali, Dasra Diwali and all of that will begin. And that's when we will see huge amount of interest coming back. And I'm sure the launches also catch up. After all, developers have been in the market for long enough and they know the seasonalities. So I would say this is a temporary blip, nothing more to that than that.
Okay. So just to sort of, get more clarity, you're saying that these launches have slowed down only because of the Shraddh period or the, upcoming Shraddh period and not because there's a bit of a slowdown in terms of the inventory or in terms of launches in general. You're saying it's only limited to the festive period, the Shraddh period, because the reason is that this is data compared to the previous years, and the previous years also had the Shraddh period. So what has changed this time?
So 2-3 things. First of all, as we all know that every 3 years Shraddh Paksh also shifts by about a month when you have an extra month in the year. So that is also something which we have to take into account. And that said, while we spoke about average out, whatever is the situation in the country, different markets are obviously behaving differently. So while we are sitting in Mumbai, we don't see any kind of slowdown of any sort. In Mumbai, we just last data point that we have was the number of transactions in July was exactly the same as the July of last year. So we're talking about YOY data also. Different markets are showing different trends, but at least Mumbai is not showing any kind of slowdown. Of course, Delhi did see last 2-3 months in Delhi have been bad. So is the case in Bangalore. Some amount of slowdown coming in these two markets. But at the same time, Chennai is looking up. Pune is doing exceptionally well. So when we're looking at averaging it out, then the trend is almost the same as last year. And that's what I was referring to more. If I then drill down to each of these markets separately and talk about launches by these developers in each of these markets, then the picture would be slightly different in different markets. But that said, the events that we are talking about today are not too much to worry about because the 2% could be just a temporary blip, as I was saying. We need to wait and watch because with the festive season coming up, we shall see huge amount of interest getting back in action.
Okay, that'll be interesting to watch out for in the festive season where we see that action coming in. Ghulam, good afternoon. What about unsold inventory? Ekta did touch upon that, but is there any rise or decline and any specific area which is seeing a major impact because of this unsold inventory?
Okay, let's get into statistics. Let's talk about numbers specific. What we do is we watch the time required to sell the inventory in the market, and that's the unit we use that. Whatever is inventory in the market, how many quarters will it take to sell this entire inventory, assuming no more new supplies coming in? So when we look at that number and look at different markets and segments, something which is very, very clear is that overall, about 2.5 to 3 years of inventory period to take complete absorption. Now, if you then drill it down, there is one segment, and since we're talking about too much of luxury all around, one segment of luxury real estate where there is clearly some amount of slowdown setting in, which is 20 crore to 50 crore ticket size market. That is where the amount of time would be taken, about 4.5 to 5 odd years to absorb the inventory. Rest of it is all hovering around 2 years for the whole inventory to be wiped out. So these numbers are very healthy, except for one segment which I was talking about, which is 20 crore to 50 crore segment. That is where we do see some sweats. But otherwise, especially the lower end of the market, if I talk about below 50 lakh, there is a huge amount of lack of supply there, because as you all know, developers haven't been focusing on the lower end of the market. And that's where the velocity of sales, less than 2 years, you will sell everything that is in the market. So when we are talking inventory, we need to drill down into what is the speeds. And mind you, the speed I'm talking about is based on the last 10 quarters of rolling averages. So as the rolling averages are also moving, we do realize that as the slowdown sets in, we do see a different trend. But right now, biggest slowdown is not yet in the picture. So we do see huge amount of comfort here from the developer side, because they will not take more than 2 years to absorb the inventory that they have at hand.
Right, we take that point, Ghulam. At the upper end, there is no dearth of supply, definitely no tapering off in demand either. But it's the lower end where people really want homes for consumption, but developers obviously not looking at that space, because, I mean, why sell a house for 50 lakh rupees when you can sell it easily for 20 crore rupees plus as well? I get both those things, but, moving off the residential space, given the sort of economic uncertainty that we have, not only because of tariffs, but just general urban consumption slowdown, and, the worry that IT companies aren't hiring, etc., the GCC is getting impacted. What is your thoughts on, commercial office rentals and real estate supply out there, warehouses and malls, because we still have a large amount of mall vacancy?
Okay, let's start with offices first. Last year we had taken about 70 odd million square feet of office space absorbed in the whole year. And this year we are on Q3, and we are expecting this quarter we shall either equal the last whole year's number or surpass that. So we are talking about this year, we are targeting at least about 85 odd million space absorption in office sector. So that means office sector, at least so far, is not affected by whatever tariff wars we are referring to. Not much of a difference yet. You're right. There are talks of slowdowns here as well, and some job losses and GCC slowing down, etc. However, the existing commitments have brought current year to a level where we do see a breach of the last year in 3 quarters itself. So in that way, at least office sector is doing fairly well. In fact, I would say fabulously well, but we would wait for one more quarter, because as you said, even we are worried about the impact of tariff wars on Indian office space absorption. But right now, nothing to worry about. Now, in terms of rent, again, this is once again supporting or strengthening the argument I'm putting up. Weighted average 5 to 7% of increase everywhere. In a few places, we have actually walked into double digits. 9 to 10% of rent increase in a year is the kind of number we are looking at in Bengaluru. Even in Mumbai, we are reaching that same number. So we are talking about both these giving a clear signal that office market has nothing yet in terms of impact coming from the global uncertainties. Nothing to worry about as far as office market. Now, last quarter, it will be interesting to see how the last quarter pans out. But as I said, even where we are today, we have already equaled or surpassed last year's numbers as we are standing. Now, coming to retail. Retail has always been a very curious kind of a situation. First of all, not many developers are doing retail malls for last 7-8 years. And the amount of new supply that comes in is also very, very restricted. And with one or two of these guys consolidating, like the retail REIT that has come about. So we do see professionalism coming in a big way. So two things. First of all, when every developer was looking at doing retail is out. This is a phase where experts and professionals are doing retail spaces. So you're right, there is some amount of concern, but those are restricted to a few of the disadvantaged kind of malls or locations. Tier 2, Tier 3 cities, we generally say that besides the top 8 cities, every city can't take more than 1 or 2 malls at max. So if you have a third or fourth mall, you know that that city is up for some serious trouble as far as retail is concerned. In Mumbai, Delhi, Bangalore, these are the markets where we do see about 7, 8 or even 10 odd malls doing fairly well. Amongst them, at least 2, 3 malls doing exceptionally well.
So net.
The consumption, and again, as I said, a lot depends on how the festive season turns around. So we are expecting retail not to do very differently. It is, I would say, a status quo. How it is behaving for last couple of years shall continue. Again, nothing strikingly different even in the retail sector.
All right. So net, Gulam, if you had to just leave us with your thoughts in terms of where you see the real estate sector this year, you see it to be equal to last year, better than last year, or worse than last year based on your assessment at this point in time?
So if I talk about real estate sector overall, well, about 80% of real estate sector is residential. Remaining is retail and offices, etc. So the performance of real estate sector hugely depends on residential market or residential sector. And there, I would still say there's nothing much to worry about because of the way things are panning out. At least the first 3 quarters have been pretty much equal to what we see the last YOY kind of numbers. So nothing much to worry about. However, there are discussions that this is the 3rd or 4th year of an uprise. And typically, if we look at about 10 to 11 years of a cycle, we are reaching that place in the property clock where we would be closer to 12 o'clock. But that's a debate, whether we are at 11 o'clock position or at 12, or whether immediately after that, do we see a quick a fall or something? Lot of discussions, but I would say we need to slow down a little. We need to reflect upon how the industry is right now behaving. And maybe after a couple of quarters, we can reassemble and see how it is moving. But for the moment, at least I don't believe we have reached the 12 o'clock position, maybe 11 or somewhere thereabouts, but not 12 yet.
Okay, Mr. Zia, thank you so much for joining us on the show, and giving us insight in terms of the real estate sector. Maybe not much of a worry right now. After a couple of quarters, we'll reassess the situation as well. But on that note, let's move on and talk about some of these stocks that are moving in trade today. Vivek is joining in with us with the list of those buzzing stocks. Vivek, good afternoon.
Well, thank you so much for that. Like you mentioned, you actually saw a very weak opening post, which you have seen quite a bit of a sharp recovery, especially when it comes to the broader end of the market. So which are the stocks that are actually seeing quite a bit of a bounce? The entire PSU pack, most of these names from the intraday lows have actually recovered quite sharply. Names like Engineers India, BL, Coal India, all of them were down quite sharply, have recovered from the day's lowest point. One stock from the broader end of the markets, the mid-cap top gainer, has to be Ola Electric. Very good volumes. This stock continues its move higher, especially in the last week and a half. Polycab, you've seen some buying activity here, good volumes as well, one of the top gainers on the F&O stance. Jefferies has come out with a note today. They have reiterated their positive stance on the stock. And a couple of names from the EMS space doing quite well. Dixon Tech, again, strong volume seen over here, recovered quite sharply from the intraday lows. And Action Construction, we highlighted this day first day as well. Today, again, on good volumes, this particular stock up almost 3%, one of the top gainers on the NSE 500. But quite a few laggards as well, post this particular news coming through, both Dr. Agarwal's Healthcare and Dr. Agarwal's High Hospital. Remember, this particular company listed in January. They said that they would explore a merger. The news has come about, but look at it. Both of these stocks are seeing significant sell-on news after this was announced. The other stock, Indigo, earlier today we had highlighted how there was a large block in the offing. The block did happen, but it was a downsized block. Instead of 3.1% equity, just 2.2% equity changed hands. Street clearly didn't like that. Also, the 150-day lockup period was actually breached, so that stock lower by almost 5% today. Bharti Hexacom, select telecom stocks continue to see selling pressure. Macquarie, continues to retain an underperform rating on this name, down almost 4%. And Sundaram Finance, again, lot of NBFC names under pressure today. Now, from the NSE 500 space, this is the top laggard. So Sundaram Fin, again, on good volumes, down almost 5% today.
All right, take that point. Thanks a lot, Vivek, for that. With that, we'll take a short break. On the other side, we have a gentleman joining in from Stockbox Technologies with some trading ideas or trading strategies. On the other side, we have Siddharth Rai Mangala.
Welcome back. Well, for the broader markets, under pressure, down around 0.6%. So that seems to be where the incremental weakness is coming in. The Nifty also down around 120 odd points at this point in time. But let's go across to Mangalam now. He's by the wall to tell us all the F&O updates, crucially at this hour.
Well, if you look at the F&O space, you would look at the frontline indices, you will say that the market's down, but perhaps not out. Why do I say that? Because the Nifty and the Nifty Bank, along with the mid-cap index, have recovered a fair bit from the lows, though at higher levels, they are facing some sort of supply. But now that they're facing some sort of supply, once again, as we move towards the August series expiry, a couple of things we have to watch out for. Today's low on both the Nifty as well as the Nifty Bank become lines in the sand. Why do I say that? Because psychologically, 24,500, a very important mark for the Nifty, and for the Nifty Bank as well, 54,000 is an important mark. Today's low is 53,916. The other part that I'm looking at is the volatility index. This morning, the volatility index at one point was up 6-7%, but it's now moved off highs and currently holding around that 12.5 mark itself. So we'll watch out for how that pans out. And the second part, with the market having moved off the lows of the morning, we've also seen put writing come back. So put call ratio has moved from 0.72, which is the lower end of the range, to closer to 1 right now. Where are these active put writers marking their positions? It's the 24,600 put, the 24,500 put, and the 24,650 put as well. Telling you that if the Nifty holds between 24,550 to 24,600, that's what the smart money right now for expiry is betting on. For real short covering to come in, the first thing that has to happen is that the Nifty has to cross past that 24,650 mark considerably, and then look at the 20-day moving average, which it breached on the way down in the previous trading session. So 24,739 is the mark that I'll be watching out for. And speaking about individual stocks, there is ABFRL, IRB Infra, CESC, Adani Total Gas, all these stocks trading at the lower end of today's trading range so far. This, along with 8 stocks in total, are getting out of F&O today. So maybe some of those positions would be unbound in the last hour of trade. We may see incremental pressure on the names that I just mentioned.
Okay, Mangalam, thank you so much for that. But let's also bring on board Siddharth Rai Mangla, a senior research analyst at Stockbox Technologies, to talk to us about the market technicals as well. Siddharth, afternoon. Thank you so much for giving us your time. Markets as of now, again, have seen a bit of a correction from the day's highest point right now. Slight bit of that downfall again. 118 points down as of now for the Nifty. What should we be watching out for, given that this is, the expiry day coming in as well, and important levels now for the Bank Nifty as well?
Hi, Vinny. Good afternoon, and thanks for having me on the show, first of all. See, we've seen a lot of beating down happening in the index for past 1 week. But now, finally, Vinny, we are right in the middle of 2 very crucial levels. On the downside, and interestingly, both these important levels are today's high and today's low. Today's high being just 2 points above 24,700, and the low being very close to 24,500. We also saw some recovery from the day's lower short covering, probably because the market is too oversold, and probably also because it is the monthly expiry. But as you just said, a full-blown bounce back or recovery can only be expected when once the index manages to go above 24,700. If the index manages to go above 24,700, which we have so far failed to do today, then only we can expect a good recovery. In fact, a quick recovery towards 24,850 or 24,900 can also be seen, but only if the index manages to go above 24,700. As long as we are above in this small range, 200 points range of 24,500 to 24,700, the market remains wait and watch.
Okay, stocks?
Yeah, sure. See, as we've seen a lot of volatility happening in the past few days, so I think it's much better to keep a balanced approach at this time. So I have 2 stocks, one to go long and the other one to go short. First, I'll tell you the stock which we should be going long on. The name of stock is Titan. See, the structure is very beautifully forming today. In fact, we've seen an open low forming in the charts, which means that the stock started rallying exactly from the point where it opened. So which means Titan is showing strength, and this strength can continue. So Titan can be bought. Right now, the stock, the spot price is around 3633. We'll have the stop loss around 3610. And our targets will be, first target is 3690, second target will be 3715. And the second stock is, here we are seeing some weakness, so we'll have to go short. The stock's name is United Spirits. See, consistently for the past 3-4 sessions, we have seen weakness becoming stronger and stronger in this stock. So, and today it also went down below the important mark of 1300. So the weakness can continue in the stock. We can short this. I'll talk about the September futures. The September futures of United Spirits is trading around 1292. We'll short it here, and the stop loss will be 1305. Our targets will be around, first target is 1270, second target is 1255.
All right, take that point. Siddharth, thank you so much for joining in and giving us your stock picks as well as the index levels that we need to keep an eye out on. Today's high and today's low on the Nifty, extremely crucial. With that, we'll slip into a short break. But before we do that, let's give you a quick reminder once again, which helps you unlock a world of exclusivity, expertise and influence. You can become a member of CNBC-TV18 Access, which is our premium members-only experience on CNBC-TV18.com. This membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, gives you access to e-learning sessions and masterclasses, along with curated lifestyle benefits.
Welcome back, and joining us on the show now is Atul Ganatra. He's president at the Cotton Association of India. Mr. Ganatra, hi, thank you so much for joining in. And first of all, congratulations, because you've been pushing for that duty-free imports to be extended. And we have the new date, which is December now. Initially, it was only done for 42 days, but now we have 3 months in hand. One, what is the impact that you see for the Indian markets of this? And because of this duty-free imports that India can do now, what is the kind of imports, total figure that you're looking at? Because we were already working with a record number. What is it that you see in sense of imports of cotton for India with this?
Good afternoon, Manisha ji, and thank you very much. Through your channel, we could reach to the government, and we welcome the decision of Government of India to extend the duty-free period up to 31st December. This will help definitely to the entire textile value chain. In this tough time, government has taken very good decision so that mills can buy cheaper imported cotton available from the world around. Many countries like Brazil, Australia, they are having large crop and no much of their local consumption. So those cottons are available at cheaper rate. And with this decision, I can say I welcome this decision, government, mainly because government has allowed a, we can say, level playing field to our entire textile value chain, so they can compete to the other countries if the cotton is available at cheap rate with them. And up to September, we believe first 1 year from 1st October 2024 to 30th September 2025, we may see around 42 lakh bales import shipments will arrive into India, and this 3 months additional period is given, and cheaper rate cotton is available in Australia, Brazil. We are seeing that first quarter, India may do 20 lakh bales imports, new contracts. Ji, Manisha ji.
All right. Mr. Ganatra, as you said, there perhaps is a push towards a level playing field with the global peers there. But with 50% of tariff on India and the rest of the world anywhere between 15 to 20%, even that 11% import duty on cotton being taken off, it is going to be still difficult for the textile as a sector. What is the kind of dent that you anticipate for these markets?
Definitely, we are having a tougher time. Next 3 months will be very tough for the entire value chain, textile value chain, because the orders which we were having in the hand to export the USA, that is almost whoever can ship has done. But now there is no possibility. Even 25% was higher. 50% we don't see any export to the USA of the textile. So the garment industry has stopped buying yarn, and due to that, yarn prices has already dropped 10 to 12 rupees a kg, and still there is a no buyer. So we are seeing the main garment centers like Tirupur, Ludhiana, Noida, Ichalkaranji, Bhiwandi, there the production is already 30-40% cut down, and we are having a tough time. But anyhow, I feel that this is an opportunity for the industry to see the new countries where we can increase where China has reached, Bangladesh has reached, India has not reached. So one door is closed for us, another 100 doors will be opened by the Indian textile industry. I am sure we are the one of the finer quality maker of the clothes and garments. So definitely 3 months is a little tougher time, but I don't see any much big problem after 3 months.
Okay. For the Indian markets as well, the Cotton Corporation of India has around 30 lakh bales, as we've been talking earlier as well. What is this cotton priced at, and what would be the imported cotton landed price for you now?
Yeah. Today, CCI is holding around 28 lakh bales unsold stock. Their price for the Sankar 629 mm variety is 55,500. Compared to that, today Brazilian cotton is available at 51,000 rupees. I believe some mills, bigger mills, they have done 2 lakh bales import from Australia, 6870 RD 2930 mm cotton at 48,000, 50,000 rupees. So government has to see why, in spite of having bumper stock, we are going to have a largest stock number end, and still unfortunately our mills has to do large historical import we have done of 40 lakh bales. So somewhere the CCI policies for the sale is wrong. They have to look into, they have increased 3,000 rupees 2 months before, whereas ICE future was that time it was 69, today it is 67. So CCI has to see, they have to match the global price for increasing cotton. And once they have increased the cotton, our mills got afraid and they have done a lot of contracts of imports. So it is the...
It doesn't really sit well. But Mr. Ganatra, also, as you said, that even as US, which has been one of the largest markets for India in sense of exports, as you said, no work for the month of August has been done. Perhaps next 3 months would be similar as well. But when you do say that you're looking at other markets, what other markets really is India looking into?
Yeah, we can do a lot of export to the Gulf countries like Dubai, Saudi Arabia, Singapore, UK also we have now market is open. Even Russia and China, they have agreed if USA will not allow you to do the import, we are ready to buy goods from you. And Russia very clearly said our doors are open and we can buy a lot of goods, textile goods, diamonds, etc. from them. So I believe in coming 2-3 months, I am very positive there will be a lot of new countries will start buying from India, because what India is making a bed sheet and towels. I have heard that in USA, every second man is using Indian towels. So even they are also going to have a tough time.
Well, absolutely. It's not just the exporters here, but the consumers in US, of course, are also going to be missing Indian products there. Mr. Ganatra, one final question, and this one really is on the Indian crop itself, because the Kharif sowing has been done. The sowing has been lower than last year. What is the kind of cotton crop that India is looking at in this Kharif season?
Yeah, our sowing is, we are running 2% behind compared to last year, but the crop conditions are very excellent. All 10 states, cotton growing states, are having excellent crop. The report we are getting from our associate direct associations. So they are saying the crop conditions are very good, and all are expecting 5 to 10% extra yield than this year, and quality also will be very good. So all association together, they are expecting 325 to 350 lakh bales crop in the coming year, compared to this year's 311 lakh bales.
Right, Mr. Ganatra, thank you so much for joining in, Ekta. Manisha, he spoke about every second person using Indian towels in the US. I have been seeing this across whatever travels that I've had in Europe and other countries as well. It's made in India, and it's usually 3 companies. It's either Welspun, it's Indocount, or it is Trident. And all the large hotel chains in the world have a tie-up with all of them. So,
but the fear is that they'll become Bangladeshi towels and not the Indian towels for the next consignment. So that really is probably the fear that we have. But yes, that's the Indian feat, and hopefully these, niggling worries will probably resolve. Thanks very much. Mr. Ganatra as well as Manisha for joining in and taking us through that conversation. Well, for the markets, just watch out for the mid-cap index, which is now at the low point, so down around 0.7%. We have the advanced decline ratio, which is actually worsened just as we've been speaking to Mr. Ganatra. So the advanced decline ratio currently stands at around 1,700 stocks advancing to around 2,400 stocks declining. As you can see, the gap seems to be widening between the red and the green line. We'll take a short break, but we'll get you more on the markets. A lot of stocks in focus this afternoon. All that once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. A bit of a fall that's come into the market as of now as well. 24,590. So below the 24,600 level is what the Nifty is trading at, down 120 points. But let's put the spotlight on Interglobe Aviation. The promoter Gangwal today sold a little about 2% stake via a block deal. And this is around a value of 5,030 crores. Let's go across to Sudarshan, who's joining in with us to give us more details on this front. Afternoon, Sudarshan.
Afternoon, Vinny. So, as per sources, block deal size was reduced in the term sheet. Company had mentioned that the block deal might happen for more than 3% equity, and that for that floor price was fixed at rupees 5,808 per share, and block deal size was rupees more than 7,000 crore. But today, block deal has happened for more than 2% equity. Exactly, it was 2.23%. But it has happened at higher price than the floor price that yesterday it was mentioned. It has happened at 5,838 per share, and total value was of more than rupees 5,000 crore. So now, after today's block deal, Rakesh Gangwal and his trust's stake in the company has reduced to 5.6%. Remember, he had started selling the stake in September of 2022 when he had held almost 37% stake in the company, but in the last 3 years, he has offloaded almost 31% stake in the company. Now his stake is 5.6%, and another promoter, Bhatia and Interglobe Enterprises, now hold around 36% stake. So now we'll have to see for the remaining 5.6% stake if Rakesh Gangwal goes ahead and sells this entire stake in the next tranche, and the next block deal we are expecting to happen in the month of Feb or March of 2026.
Okay, all right, Sudarshan. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Interglobe Aviation. That stock is down around 4.8%, one of the big losers in today's trading session. Well, we need to take a short break, or rather, we will wrap up on, we'll take a short break. But on the other side, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at just your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
Just below the 24,600 mark for the frontline index. Just keep an eye on a couple of these IT names. Wipro, for one, is now trying to attempt a bit of a recovery. It's recovered about 0.9% from a low, still sitting with a cut of almost 1/3%. Whether these IT stocks move higher in the second half of trade or not will be extremely crucial. What will also depend on is one, the way tariff talks progress. That will tell you a little more about the US state of the economy. The second thing is the rupee that you'll watch out for. Very close to a record low as against the dollar. But let's just keep an eye out on the intraday rupee. It's strengthening a wee bit. So let's see where that one goes as well. We are seeing continuous traction in a couple of these consumer durable names. So Crompton, for one, has now moved higher as well, has moved to the high point of trade. With that, we'll leave you on this edition of Halftime Report with the news that the market continues to hold at lower levels of lows but of highs once again as well. The next couple of hours extremely crucial also because it is the monthly August series expiry. Take a short break, come back. Business Lunch takes all the market action ahead.